And I'll introduce our guest speaker for the session. This is Jacob Yakos. He is our CPA and accountant for Che. He runs a organization called 501 Core, and they help nonprofits do all the stuff that we don't want to do. And he handles them with grace and love. And so he's been working with us for the last several months, getting us onboarded, and is the one to make sure that we are doing everything so the government gets their portion, and we get everything paid for, filed, and all that. So he's going to talk this afternoon regarding microcampus leaders as private contractors or as 1099 contractors, and how you can utilize that on your taxes. So Jacob, I will turn it over to you, and we look forward to what you have for us.
Awesome. Thanks, Jeff. Yeah, so like you said, my name is Jacob. I've worked with nonprofits for quite a long time, but I also had my own private tax practice for a while, which I'm no longer doing. But so I'm very familiar with individual tax returns and the questions and how to, get the most benefit on your taxes. I've had many conversations with clients over the years on these type of tax issues. So hopefully I can give you guys some good information, and also I'm happy to answer questions too. I'm going to start my presentation here. All right, give me 1 second. All right, can everyone see my screen? Everyone's muted. I will assume you can. All right.
Fine.
You're good? You can see it? Okay. All right. So my self-employed tax guide. Now, the first really important thing is, and I am required to say this is not personal tax advice to you specifically. I'm giving you general advice about taxes, not your specific situation. So if anything goes wrong, can't sue me. Okay. What are I want to talk about the main differences between a W-2 employee and a 1099 NEC. Now, as microcampus leaders, you'll receive a 1099 as opposed to a W-2. And there's quite a few smaller differences, but these are the main big differences. So a 1099 self-employed individual, the main largest benefit is you can deduct expenses. Now, a W-2 employee, you are unable to deduct expenses. I had clients over the years where maybe a husband and wife both just received a W-2, and they're asking, what can we do, what can we deduct? And you just don't have that liberty to do that. And so that is the main pro for being a 1099 contractor. And then the other differences are taxes. So a 1099 contractor, you need to set aside taxes. Nothing will be withheld from that, whereas a W-2 employee, you have your Social Security taxes, federal and state taxes withheld. And we'll talk about that a little more. But those are the main differences. So how do you file? And I apologize if some of you guys know all or a lot of this stuff. I'm just kind of started baseline here. So how do you file your taxes when you receive a 1099? So you will fill out something on your return called the Schedule C. And on the Schedule C, you'll report your gross revenue from your 1099. And also, if you have other income that's not employee income, this is where you would report it. Also on the Schedule C, you categorize all of your expenses, and after you deduct your expenses, you wind up at net income. And that net, so the gross revenue minus expenses, you get the net. That net winds up in your taxable income on your tax return. Now, obviously I'm probably a little biased because I'm a CPA, but I highly recommend most people to get a CPA to file your tax return. Just after years of doing it, it's worth the value. I mean, even people whose taxes aren't that complicated, a few $100s a year, most of the time when I did people's taxes, they came to me and I would look at their prior year tax returns. There was things they were leaving on the table that would have saved them more money than they were paying me for sure. Or people that had been making mistakes for years that you had to go back and fix. And hopefully I'm not treading on anyone's toes here. There's a difference between like a tax preparer and a CPA. I fixed a lot of people's prior year taxes that had been done by other people that were in the tax business. And so, it's worth the $200-300 to have someone do your taxes if you can afford it. I've just time and time again. So I don't do that anymore. I could recommend several people in town that I know are good, but that's my plug. This is probably a little small on your screen, but this is the Schedule C form that goes along with your taxes. And, you just write in here your principal type of business. And then part 1 there, you have income. And part 2 are the different expenses. And you arrive at your net income. So looks fairly complicated, but it's in reality, it's fairly simple. If you just think of it, income minus expenses, they're categorized, wind up at your net income. So how do you get ready for tax time? What are you going to need to do now? So when, hopefully it's not April 14th, but, hopefully earlier in the year, you're getting your taxes ready. What do you need to get done? So obviously you need your 1099. And if you get, I don't know, everyone's situation is different, but if you get other income. And then a list of expenses by category. So, that would be all of your expenses throughout the year that you paid out of pocket, totaled together. And then we're going to go into each of these in more detail, but info needed for your home office and mileage deduction. And then save your receipts. So digital or hard copies, fine. I like doing everything digital. It's just, for me, that's a lot easier, but save your receipts and hold on to them. So what can you deduct? So the IRS, there is not a list. I have had for years clients ask me, can you send me a list of what I can deduct? Well, it's sort of different depending on what you're doing, the type of work you're doing. So the IRS, they do not have a specific list. Their wording is anything reasonable and necessary. And so if you are questioning an expense that you have, you just got to run it through those parameters. Is this reasonable, or necessary? So like if you need to pay for some supplies or a computer or something out of pocket to do what you're doing, that seems reasonable and necessary. Is a trip to Italy reasonable and necessary? Probably not. And then there's direct and indirect expenses. So direct expenses, we'll get into these. Things you can tie to a receipt, very simple. Indirect expenses are things like the home office deduction, mileage, that type of thing. All right, so direct expenses. So this is, I just wrote some examples. So it could be supplies, travel, meals. And the meals are if you are away from home while you're working, or if you're having a meeting, maybe you're not traveling, but you're having a meeting and discussing work. Continuing education, computer equipment, anything else reasonable and necessary. And again, keep your receipts. So indirect expenses. So these are things like internet, your cell phone, home office expense, mileage, computers, and again, anything reasonable and necessary. The reason these are indirect is that you may write off a portion of these items. So, if you have internet in your home, you use that for work, but I'm assuming, and the IRS also assumes, that is not the only thing you're using your internet in your home for. And so, writing it off, the entirety of it off, probably not best practice. So you would write off a portion. And same with your phone. Computers I put on there again, just because kind of the same concept. Maybe you buy a brand new computer, you're going to use it partially for work, but it's also, maybe a family computer, something like that. And so you just kind of have to differentiate. But again, we look at this through the lens of reasonable and necessary. So how do you calculate these indirect expenses? I just put an example here. Let's say your phone, for the whole year, $900. You kind of come up with some parameters. Okay, I think I use this a quarter of the time for work. The rest of the time is personal. So your tax deductible expense is $225. And again, if you guys have questions too, feel free to jump in. Unreimbursed mileage deduction. So this is another great indirect expense that can really add up. And so the things you need to do is keep a log. And that there's a lot of apps that make this super easy. Or you could just keep a notebook in your car. And this replaces actual vehicle expenses. So you can do one or the other. You can have, okay, I bought gas, here's the receipt. Here's my repairs, etc. That's quite a bit more work. And the IRS understands that most people use their vehicle for work and personal. And so, years ago, they came up with the mileage rate. And the mileage rate changes every year. So then you need to keep miles per trip. Addresses are a plus if you can do that. Like I came from here, going to here. The purpose of the trip, show why it's work related. And then you see here in 2023, it's 65.5 cents per mile. So if you have 450.4 miles, business miles driven in the year, you get a $295 tax deduction on your Schedule C. All right, home office deduction. So you can, if you are self-employed, anyone self-employed, and if you're working at home, you can deduct the business use of your home. And so what you need to do is add up the total expenses for the year. So, these would be mortgage interest, property taxes, or rents if you're renting, utilities, insurance, repairs, and anything else, if you have landscaping costs or other costs associated with your home. And then you take your office area, the square footage divided by your total square footage. So office area can be a little tricky sometimes because, I used to have clients and they're like, well, I work in the kitchen sometimes, and then I'm working on my bed, and what is my office in my home? And so that can be a little bit nebulous sometimes. So just have to come up with something reasonable. Let's say, okay, I work in this room most of the time. Just come up with the square footage, divide by the total square footage of your house. And then you arrive at a percentage, which then you take towards all those expenses and come up with your home office expense. The IRS does have a simplified method. If you don't want to do all of that, they let you just take $5 a square foot for your office area. So here's an example. So let's say your mortgage interest, $15,000 a year, home insurance, property taxes, utilities, repairs, depreciation. You wind up $34,600 for the year for a home. Depreciation, that $7,000 expense on there, that is something that gets calculated on this form on your tax return. So they take the total value of your home, and they have equations built into the form, and you get to write off a portion of the value of your home every year, which obviously, that it can be a pretty significant amount. So now we don't get to deduct that total 34,600. What we do here you see on the right, we got to take our office. So let's say you have a 100 square foot office, your home's 3,000 square feet. So here we're just at a little over 3%. So we take that total amount times that percentage, and there we arrive at that $1,153 tax deduction. So that comes again out of your gross income to arrive at your net income. Now, there are deductions for health insurance and retirement. If you're paying health insurance out of pocket, or you have retirement contributions. Now, these are a little more complicated because it depends on other factors on your tax return. It depends on your income. It depends on your Schedule A deductions, some medical costs and all of those things. So this one's a little more complicated, but I just wanted you to be aware that there are deductions if you are paying for any health insurance or retirement. And this doesn't include like 401k if you have other employment, but like an IRA or Roth IRA. Okay, setting aside taxes. I had people all the time ask me, well, how much should I set aside? And it's hard to give a direct answer because everyone's tax situation is very different. There's your other income in your family, there's the number of dependents, kids you're claiming on your tax return. There can be so many different factors. And so I'll just kind of give a rundown. So obviously you have IRS taxes. So your net income, so gross minus expenses arriving at the net, that gets added to your federal taxes to the IRS, which can be taxed 10 to 37% is like people that are making a lot of money. So I mean, most people are in the 10 to 22%, somewhere in there. And then you have Colorado taxes, which are 4.4%. And then there's self-employment tax. So when you have self-employment income, specifically on your Schedule C, that the net amount is subject to self-employment tax. And what self-employment tax is just both halves of Social Security. So this actually goes into your Social Security. It's all wrapped up in your personal tax return. So you're not paying, somebody else the Social Security and your income taxes here. It all gets looped together in your tax return. And this is all, if you are doing your own taxes like TurboTax or something, this all just gets calculated in. But that's why coming up with expenses is always awesome when you're self-employed, because it helps bring down that self-employment tax. And there is a self-employment tax deduction as well. So half of what you pay in self-employment tax comes out of your net income tax when calculating your income taxes. So I said it's hard to tell someone how much to withhold because, again, everyone's situation is different and credits may offset these. I have, depending on your number of kids in your family, you might have quite a few credits and might actually get a refund back when you file your taxes. And so if that's the case, then there's no need to set aside any taxes because you're just getting money back anyways. And so what I typically would tell someone, and if they're asking me how much do I set aside, either I could really, what I used to do is I would get a good look at all of their income for the year, try to figure out where they're going to land at the end of the year, and come up with a really good estimate. Or you can, I mean, you can look at your prior year tax returns, and if you know, maybe not much has changed or just here and there, if you typically get a large refund back because of child tax credits and that type of thing, then you might not withhold, set aside much or any. But if you're somebody that typically owes every year, then I would highly consider setting at least 15% of your net aside. So again, I wish I could just tell you withhold this much or set this much aside. But again, everyone's tax situation is different. I do get asked quite a bit too about paying estimated tax payments. And I had clients that on both sides of the spectrum I had some who would never ever pay estimated tax payments, and then I had some who were very worried about it and they would pay more than they were supposed to every quarter. And so there's not really a wrong way to do it. You're supposed to make estimated tax payments, but the penalty for not is very, very small. And so, a lot of people just want to hold on to their money until tax time. And then, when they file their taxes, they'll pay. The IRS, if you end up owing more than $1,000 for the second year in a row on your taxes, they will penalize you for not making estimated tax payments. That penalty is very small. So I had clients who maybe owed $5,000 when it came to file their taxes, and the penalty for not making estimated payments was maybe like $60. And so it's not, again, that's why I say it's kind of optional, just because there's not that big of a penalty. But if you do want to make estimated payments, then you can do those quarterly with the IRS. All right. Keeping track of expenses. So there's a few tools that you could use. And when I was preparing taxes, I loved it when clients came to me and they just had a report, and said, here you go. Here's my total travel. Here's my total software cost. Here's my, total meals. And that is kind of what you want to get at the end of the year. So if you can do that throughout the year, it saves you a lot of time come tax season. So obviously there's Excel, put your expenses in Excel, save your receipts. Expensify, I'm a big fan of Expensify, and it's just an app you can have on your phone. It's free. There's a free version of it. You can take pictures of your receipts, and then you can select the category. And then it easily creates a report at the end of the year. So I used to have tax clients that used that, and that was great, because they have all, just at the end of the year, you print out one PDF, multiple pages long. It has, your amount per category, and it backs up all the receipts in there in the PDF. You just save it on your computer and keep it there. Those were my favorite type of clients. And if you just do it throughout the year, so much easier. I had clients who were self-employed, and come tax season, they're going through their credit card statements and their bank statements, highlighting things they thought were maybe business expenses, and then trying to find the receipts. But just doing it throughout the year. The other nice thing with Expensify, if you have an online purchase, you can just forward your receipt, to your specific Expensify email address. It gets added in. So hard copy or online receipts, very easy to track. And there's other ones. I mean, I haven't used a ton of other ones, but I mean, when I was putting this together, I just Googled free receipt tracking apps, and there was like 20 of them I saw. So yeah, so that's, again, you'll want to do this as you go. one thing, I thought I had this in here, but I don't remember seeing it in my presentation, is we want to track receipts that are not reimbursed. So an expense for you that is reimbursed back to you is not, you cannot use that as a tax deduction. And the only way you could use that as a tax deduction is if it was included, also that amount was included on your 1099, which with Che, that won't be the case. But I've seen that before where, somebody gives somebody a 1099 and the amount in the 1099 includes what they paid them plus all their reimbursements. So their gross revenue is higher. If that's ever the case, then you can deduct those expenses that got reimbursed, since they're included in your income. But when you have expenses that are just reimbursed to you, you can kind of leave that out of this, your tracking altogether. You don't need to worry about tracking that. So that's it. That is my hopefully somewhat exciting presentation on self-employment taxes. So I'm happy to answer any questions that you guys may have. Jeff, if you have any questions.
Yeah, there was one that was mentioned. They were asked if a person is renting, can they deduct office expenses in the same way?
Yes.
Excellent.
Yes. So you can either do the $5 per square foot, or you can do your, no, I just got really blurry. Sorry, my camera's broken a little bit. You can do like your total rent, utilities, all of that, and calculate it the same way. Yeah.
Okay.
Sorry, I don't know what's going on here.
Right. Anybody else have any other questions?
So I saw you wrote 25%. Like, I'm thinking cell phone, computer, internet.
Mhm.
25% is reasonable for what we're doing for Che? Families talking about
25% is just, I just threw that number on there. That is something that, like, I don't know your guys' specific situations, but I would think of it in terms of like, sorry, I'm just thinking how to put this.
I mean, I'm just wondering, because we're just doing the work here for these micro campuses. Nobody's logging their hours or anything, or how long they're spending on the phone or computer, meeting with people.
So I would try to think of it in terms of like a work week, 40 hours a work week probably, and then roughly on average what you spend like a week. So let's say, you have a 40-hour work week, but you spend 10 hours, or I'm just making up an example. Let's say you spend 10 hours a week.
Yeah.
Well then, that's you just wind up at 25% there. That's how I would look at it in terms of work weeks. There's not a specific like formula for that the IRS gives. They throw a lot of things in these gray areas and just say it has to be reasonable. And so then, we come up with a way to make that reasonable.
Thank you.
Did I answer your question?
Yeah, I think so. I mean, it's just, I think yeah, I just don't want to raise any red flags, right? After the fact.
Oh, for sure. Yes. The IRS. Sorry, I'm so blurry, everyone. I'm trying to get this. Cool. I'll just be blurry. Let me turn this off.
Any other questions before we sign off? There you go. Okay. Well, Jacob, thank you very much for your time.
Oh, of course.
And yeah, if there's follow-up questions you think about afterwards, you can always email me or Josh, and we'll relay them to Jacob. So everybody have a great day, and thanks for coming.
Awesome.
Thank you.